Well, after very strong results coming in from both Infosys as well as TCS, it's time for HCL Technologies, and we need to watch out for that. Will HCL Tech in fact perform far better than its own mid-quarter guidance? In fact, Ethina poll expects a revenue growth in constant currency terms to be at 4%. Dollar revenue is seen at 2485 million, which is a growth of close to around 5.5% on a sequential basis. In fact, if you look at the HCL Tech mid-quarter guidance itself, they had guided for revenue to exceed 3.5% QOQ in constant currency terms. This was as per their mid-quarter guidance, and as per the Ethina poll, we're expecting a 4% constant currency revenue growth. So we need to watch out for that. Besides that, of course, the EBIT margin is seen expanding 40 to 80 bips on a sequential basis. This would be on account of better revenue growth, better utilization, cost control, efficient execution, and of course cross-currency tailwinds of anywhere around 150 to 160 bips. EBIT margin is seen at 20.9% for HCL Tech. This is versus the 20.5% in the last quarter. Management in the mid-quarter update guided for EBIT margin of 20.5 to 21%. In fact, if we also need to watch out for, will HCL Tech in fact go ahead and hike the FY21 guidance for the EBIT? In the first quarter itself, management had guided for FY21 EBIT margin of 19.5 to 20.5%. So watch out for any upgrades on that front as well. In the mid-quarter update as well, management stated that the deal momentum is fairly strong and that they are seeing broad-based revenue growth across service lines, verticals and geographies. They're seeing very strong bookings continuing into this quarter, especially on life sciences and healthcare, telecom and media, as well as the financial services vertical. So yes, watch out for the communication from management on these verticals. Will the deal momentum be as strong across the verticals? Watch out for that. In fact, besides that, if you look at what Edelweiss is stating, Edelweiss states that HCL Tech should be a key beneficiary of core transformation, higher cloud adoption and digital adoption, and they expect the company to upgrade its outlook for the rest of the year from their earlier guidance to at least 2.5 to 3.5% for the next 2 quarters. So according to Edelweiss, they are expecting a better guidance for the next couple of quarters. Watch out for that. Besides that, of course, the entire commentary in terms of deal momentum, pricing, outlook across verticals, especially the mode 1, 2 and 3 adoption solutions would be important. TCS as well as Wipro have announced buyback, while Infosys has announced interim dividend, a strong interim dividend. So watch out for management commentary in terms of the overall capital allocation policy. All in all, a very good quarter is expected by HCL Tech. Keep a watch on that guidance. The stock has already hit record highs in recent trades, and we have already seen good amount of profit booking in trade very recently.